want to start the show today with the Prime Day action we've been discussing here as it continues to roll on. Walmart, not to be outdone, also having their current sales event, the big sale. Maybe you might not know the name of it, Prime Day, getting a lot of the coverage here, but want to discuss more of the sales that we have been seeing on that front. And here to talk that with us today is our first guest, Santosh Rao, head of research in Manhattan Ventures Partners, joins us now. And Santosh, I mean, talk to me about, everyone's talking about how this needs to be a record for this to really be a success for Amazon. Data right now coming in from Edison Trends does show it pacing ahead of last year on the sales front through the first 7 hours. So talk to me about what you've seen and how you grade it so far.
Yeah, I think this year is expected to be another banner year. I mean, last year was a banner year, and this one is supposed to be more than, or expected to be more than that. So roughly 40%, 40 to 50% more than last year. And I think this year, Amazon is ready. They have a lot more warehouse space. Then they have more fulfillment centers. So I think they're going to ship more from their own fulfillment centers. And they have 2 new countries in there also. I think they added Brazil and Turkey. So all that, I think the demand is going to be strong, and they're ready with the infrastructure. So it makes sense that they'll have another banner year.
Yeah, when we look at the sales, so again, it's just the first 7 hours because it takes time to track these things, but Edison Trends does show that it's pacing ahead of last year, 19% higher than what we saw last year. Can't really compare it to 2018 because Prime Day started in the middle of the day when more people are online generally than late at night. But when you do compare it, there's the other interesting thing that I noted in Walmart also having their big sale as well. The share spend, according to Edison Trends, does seem to be being pulled over by a little bit here to Walmart, 3% this year versus 2% of the market share of online spend during those 7 hours last year. Also Target rising, Best Buy rising. So talk to me about how this might be. We talk about so much the competition in the e-commerce space, but how this might also be a rising tide lifting all boats here.
Yeah, I think so. I think this COVID has added to the demand side of the equation. So I think a lot more people at home ordering more. And I think e-commerce is where it's at. So I think it's not a zero-sum game. There's a lot more there. So you'll see all of them going up. I think the main thing now for Amazon is I think it's going to pull. I mean, it's 2 months later than the usual, 2 to 3 months later than the usual. So it's going to pull forward some demand from the holidays. So I think that's good. It's going to ease the pressure in the December, the holiday cycle. So I think overall, I think it's going to be great for them. It's going to be great for Walmart. It's going to be great for Target. Like you say, the rising tide, it's going to pick everyone because e-commerce and digital sales that's where it's all at this point.
Yeah, that is the interesting thing. It's a later than usual Prime Day due to the pandemic. But outside of Amazon, I also want to talk about Apple because we got that big event yesterday, the announcement of the iPhone 12 and a couple other gadgets out there ahead of the holiday season. Apple shares, are trading right now in the red. We saw that happen yesterday, but before the event started, if you go back to Friday, shares are still up by about 3% after all the hype and then also the event. So talk to me about what you saw and how you think it might shape up the end of 2020 for Apple, as well as this upgrade cycle expected to continue here in 2021 and beyond.
Yeah, I mean, I have mixed feelings about it. Yes, it's good. You have a lot more devices, a lot more choices, but and these are 5G enabled. But you really can't use 5G, so it's underwhelming in that sense. The super cycle, it's going to stretch out over 2 to 3 years because we still have to wait for the networks to be built. So in that sense, the 5G capability is good, but you're not going to be able to use it. Other than that, there's enough for everyone. There are about roughly 300 million phones that are due for an upgrade, about 1/3 of the base. So I think they will come in, they will take it. There's some small iPhones, big ones. So there's something for everyone. Good cameras, good processing speeds, and all that. So for the people who need to upgrade, there's enough reason to upgrade, but not for 5G, but just to upgrade. The real 5G crowd is going to come later on when we see the apps on there and the networks are built out for them. So that's going to take a longer time. So net, I think the super cycle is not going to be 1 year. It's probably going to stretch out for 2 to 3 years. That's my take.
Are you all, I mean, would you also be in the camp then, I guess, that some of this was overhyped if you think about this being, a hotly anticipated iPhone? Each time we get that upgrade, it does seem to get investors riled up. Do you say that maybe it didn't live up to the expectations we were looking for?
And that was surprising because we knew this. This was very well telegraphed. This was long expected. I don't know why the stock jumped just because 5G phones were released. We knew all that. So I think the pullback is warranted, but it's a long-term story. So you got to go in there. 5G phones are great, but every other company is also going to have that, as T-Mobile and all of them are going to have it. So it's going to be about which network has 5G and which devices work best. So there's going to be a lot of choices ahead. At this point, it's not a slam dunk. It's out there. But near term, I don't see any need to jump in and just kind of grab the stock, so to speak.
Yeah. I'd be curious too. I mean, when we talk more long term, some of these tech names, Amazon, Apple, both dealing with the election, we've had a few guests come on saying that the election really in the short term doesn't matter. Whether you get a Republican victory or Democratic victory, you're likely to see a stimulus bill and more stimulus on the other side. But there is one key aspect I wanted to ask you about, and that would be the antitrust pressure that we've seen here, because it's come from both sides, but specifically from progressive Democrats. They've seemed more hard set on breaking up big tech. So if you do see a blue wave come through here, would you maybe consider that to be a negative catalyst or potentially an overhang here for some of these big tech companies moving forward?
Absolutely. That's a big overhang. And it's been there for a while. I mean, we've seen Facebook and even Amazon, all of them in the throes of the regulators. So they are after them. But we'll see how it plays out. You can make arguments on both sides that you can break up, you don't break up. But I personally believe that they should not be broken up. There should be some regulation, some guardrails around them. And let's see how it plays out. But they are good, they are big, and they're dominating because they're doing the right things, not because they're being unfair, not because they're violating anything. It's just they are doing a good job. And when they made the acquisitions, they were small companies. So it's really, you really can't blame them for being any unfair or anything. So that overhang is going to be there. And if the blue wave happens, I think the hammer is going to get bigger. The overhang is going to get darker. So, but let's see how it plays out in the end. So it's a long way to go, but the overhang is definitely in there, more for blue wave than for red wave.
And in assessing that overhang too, I mean, it's not just what we might see since, we did get that congressional report and talking about antitrust risks. There's been a lot of effort made by lawmakers on that front, but also the Justice Department may have learned some things through that process too. Google is one of those companies that's in the crosshairs a lot when we think about that ongoing investigation and what lawsuits might come. But does it raise to the level of maybe parsing out and readjusting portfolios here on that risk to maybe say, look, I like one of these FANG names better than this FANG name because that risk in antitrust or whatever pressures might come seem a little bit lower? Is that something that you might advise investors to look into?
Yeah, I think you have to be aware of that. I mean, we saw that with Microsoft. It's going to stretch out over a number of years. It's not just going to happen overnight. So you have to be cognizant of that and see how the wind is blowing, so to speak. At this point, I wouldn't do anything. I think these companies are doing whatever they're doing. They're on the right track. There's a lot of demand ahead. And there's a lot of runway ahead. But you definitely have to be cognizant of the risk ahead. Regulations has been, and I think a lot of it has been priced in also. So because we knew about this for a long time. They are dominating everything, the media space. So they have a monopolistic power, even though they're not a monopoly, but they have the power to be a monopoly. So I think that has its own ramifications. So I think to the extent you can ding them on being a monopoly, I think you have a risk. But I don't think they're doing anything unfair. You need to set the rules, and they're playing by the rules. If you change the rules, they will adjust to that. But at this point, these are the rules. They're playing within the rules, and they're executing very well.